Over the weekend, we had some stress tests on the banks and on what was happening with the market as far as continuing to raise these rates. Now, this led us to a pretty shocking conclusion. Goldman, being one of the bigger banks, came out and said they expect a pause on rate hikes going forward. Now, what's interesting here, and this has basically been all the banks, Morgan Stanley, Bank of America, everyone's coming out with the same thesis now. What's very interesting, though, if we scratch what's happened over the past 5 days, give or take, last week, what was Goldman saying last month? Goldman Sachs, Bank of America, expect 3 more rate hikes this year. Now, the question to ask here, are we supposed to pause rates because there was an issue made by the Fed? Or are we pausing rates because banks made bad trades? And then from that question, you have to ask yourself, is the Fed looking at this from a point of view as let's stop inflation or let's stop a recession? Is short-term pain in the market worth the future of the market? Or do we satisfy the short-term needs of big money out there right now? That's the million-dollar question. In yesterday's video, I went over a lot about SVB and what was happening there. Today's video, I'm going to be going over some of the price action, where we're at, where we bounced, and then overall my expectations, because tomorrow we have CPI, PPI coming in Wednesday. So it's going to be a very big next few days, if you will. So there's a lot we do need to discuss here. But I'm here to tell you right now, if we start pausing rates, it is not because the Fed did something wrong. It is solely based on the fact that we are bailing out banks for making bad trades. I encourage you to understand why SVB went under. Did it go under because of the Fed raising rates? Did it go under because of there being a massive issue with consumer spending? No, actually the opposite. We have healthy unemployment that is still record-breaking low. You could argue it's unhealthy because it's so low with where inflation is. We have consumers still spending out of their ass. We have savings at all-time lows. However, we want to stop the one thing that will, keep inflation hopefully controlled or push it down, right? We're going to risk entrenching the market. That's what big banks want to do. So let's get into this video. Now, before we go any further, I'm going to have to ask you to do 2 things. Consider liking, consider subscribing. Every single day I make these videos for you so you are prepared. On Saturdays, we do educational videos. And then every day at 10:30 a.m. Central, I am live going over the market's favorite trades I have out there and just giving you any type of tips, what I'm looking at in the market, and trying to give you a little bit of an edge. I'm trying to be as unbiased as possible. I did close my AMD trade today. I will post that trade here on the channel tomorrow because it's updating to my journal on TradeZella, and I want you guys to be able to see all of it, and I want to be completely transparent about how much I made on that trade as well. So the newsletter did come out last night. The link is down below. It's absolutely free. It told you everything that was going to happen today. It told you where we would bounce on futures and everything in between. So there's no lying, manipulation. You had everything there. I'm not selling anything in this also. It's 100% free. I actually pay for all the fees to get this made and to make sure we're going to get delivered each and every week. You can see there's literally I'm not selling anything. If anything, there's right here down here, TrendSpotter's a link for 25% off. But that's it, right? Not selling anything. Let's get to the video. So a few things we need to attack here in the video. Now, let's talk about where we went to. So first of all, what did we say in yesterday's video? What was target number 1? It was the weekly moving 200 moving average on the Nasdaq. We went right down to it. We actually went about 20 points below and bounced, okay? Now, if you get a better visual of at the market open, going into like the 1 hour, you get a better visual. So this was pre-market. This was during the market right here. So right when market opened, you came within 2 points of that level, which was on that watch list, so you knew where. Then we pushed back up, and where did we start to mount? Let's change this back. It was also on that list, on the watch list. The 200 daily moving average. They're very close to each other. Those are 2 main areas we're watching. We can see we're trying to mount. We're trying to stay above it. It's decent, okay? Decent close to the end of this day. Not terrible, okay? So this looks decent going into tomorrow. But what is tomorrow? We have CPI tomorrow, right at open. It's going to be an hour before open, so you'll be able to see that. It will all be there for you to see. Here's investing.com, so you can see right here. Going into tomorrow, as you can see on the left-hand side is going to be Eastern Standard Time. But you can see CPI is going to come out 8:30, so an hour before market open, core and regular CPI. And then tomorrow, The day after tomorrow will be PPI. So a lot of information coming out. Make sure you're ready. Now, there's a lot I have to go over in this video. I'm going to go over some charts and I'm going to go over some more fundamentals here in a second. Now, looking at the key levels here, nothing's really changed. In my opinion, we are bearish until they come out with a statement regarding the hikes, my opinion. So over the next 2 days, we have PPI and CPI. And this is my opinion on those. Now, yesterday, I did not believe we would pause rates. I'm having a little bit of a change of heart. I try to not ever change my opinions too soon. But I'm going to say right now, if PPI and CPI come out cool, meaning they're lower than expected, I 100% see the possibility of a pause of rates. Why? Because of basically what we've done with the bailout regarding SVB and crypto. And I'm going to talk about crypto in a second because there's a lot we need to discuss there. And I just believe it's really just a shame of everything that's happening right now. But based on how quickly they acted on this and how they backed what's happening with USDC and the backing of basically the dollar on crypto, I have to believe if inflation comes out cool, they're going to pause rates at the next meeting, which is next week. If they don't, if PPI and CPI come out higher than expected, I think it's 100% likely, if 6% or above on core CPI, I 100% believe they will raise rates again. 1,000%. I don't care what Goldman says. I don't care what anyone says. The Fed is not going to risk inflation becoming entrenched. And this right here will be the catalyst that can make inflation become entrenched. If they let off the gas while inflation rises again 2 months in a row, signifying that the first month of dropping was a blip, it will show you that the Fed is totally disaligned with the goal of getting inflation down to 2% target, and you will never reach that target within the year, and they will not cut rates. Everyone's also projecting that they're going to have 2 to 3 rate cuts. That will not happen this year. There's no way in hell you can get inflation down to 2% if you pause rates whatsoever. So there's no path, in my opinion, to getting inflation down to the 2% target where you start to cut rates right now. As of right now, unless they lower that projection, which I just don't think they're going to do, but it's possible. Anything is possible here at the end of the market. You can see we're actually breaking back down. So again, into tomorrow, what are our levels we're watching? The weekly overnight is going to be huge, 11.7. Again, if this level breaks, I'm going to stand by my statement. If the weekly breaks and we hold below the 200 moving average on the weekly, I 100% believe you will make new lows on the Nasdaq. Okay, 100%. Hold me to it. Come at me, attack me. It is what it is. ES, you have some range to your get there. Now, what did we say yesterday? This is a very big demand that you have here on the daily. I hate having demands this large, but it is. This whole level from 388, 70, all the way down to basically 37.90 is a demand. We chopped here for almost 2 weeks. This is going to be a significant level, okay? If you break below this, I'm going to say right now, this is a little bit aggressive, but I believe if you make a lower low below 37.90, 37.88 roughly, I believe you make new lows on ES as well. ES is definitely more bearish than the Nasdaq right now, okay? Because ES has a lot more banks in it compared to the NQ, right? So it makes more sense why ES and Dow are getting hit harder than the Nasdaq, where in the Nasdaq you have Microsoft and Apple going crazy as well, which Apple's obviously and Microsoft is in the SPY. You have to understand that the biggest and most bearish aspects of the market aren't even touching the Nasdaq right now, comparative to the ES, okay? So again, not even breaking below the weekly. I mean, I think the weekly is really big. 100% think it's very big, but I'm going to go out on a limb and say if you break below this demand level here, it's looking highly likely you test or make a new 52-week lows on the ES. And I know people aren't going to like the statement. They're going to say I'm a big bear. But again, when it comes to this channel, you are never going to come to this channel and say, Tyler, I think Tyler's not being honest with me. I think he's just trying to say something so I give him a view or a like. That's not ever what you're going to get here. Like I said at the end of yesterday's video, I wasn't happy about being right. I wasn't happy about some of these banks, what's happening with them, because ultimately it's not going to affect big money. It's going to affect really people like me and you. I'm not this super wealthy individual. I do well for myself, but it's going to affect the middle class more than anyone, which I don't know if I could consider middle class, but it doesn't matter. More people, you, the viewer, know. right? Or even lower class. It's going to affect all of them. And those are the people that are going to lose their jobs. Those are the people that are going to be affected by the banks. I don't care what Biden says that these bailouts aren't going to be paid by taxpayer money. I refuse to believe that. Where is this money going to come from? As of the same time when he says this as well in the market of saying that the bailout isn't going to be paid by taxpayers, he follows it up with a statement that we need to prepare $800 million to send to Ukraine, which again, I am totally against what's happening with Ukraine and Russia and all that. I've been a very strong advocate of saying that what's happening over there is wrong. But we need to identify where we're putting our priorities and the timing of where this is all being said. If understanding, is it political or is it actually caring for us, the American people? Okay, this isn't about being pro-Trump or being pro-Biden or being Republican or Democratic. It's about the facts of what's happening to our economy before our eyes. And it's about we're being lied to continuously. If we identify and sit down and talk about everything that we've talked about here on the channel, we can honestly say that, and this is not to put me on a pedestal or put me above anyone else. It's to say that everything we've talked about has been true. When we looked at when inflation data was dropping, what did we say about that data? That no inflation was actually dropping. They were lying to us. It was all about energy. And what's happening with our shale oil right now? What's happening across the board? Why are we not discussing what's happening with oil, right? These are the big concerns. And if we start doing what they say we're going to do, and I'm telling you, I promise, if we come out next week and we don't raise rates, the path of becoming entrenched with inflation, it's perfectly aligned now. It will be perfectly aligned. And now they're saying they want them to stop the quantitative tightening. They're saying that they want them to stop selling what they're doing, just pause. The banks want to control now what the Fed is doing. And we will get a clear answer if the Fed is being controlled by the banks next week. And I think next week is going to be one of the most important weeks possibly of the future of our economy. Remember weeks ago, and everyone ridiculed me. We came on the channel and we said, I have not been this bearish on the economy possibly ever. Now, granted, what I will say is obviously in 2008, 2007, I was, I had to have been around 12 years old. So obviously I was not investing in the economy at 12 years old, or else I'd be the prodigy of all economists out there, right? But let's identify. People called us crazy here on the channel. They said, Tyler, the market's healthy. We're going to bounce back. We look great. 2 weeks later, 3 banks in the United States roll over. One of which is the 4th largest bank in the United States. One of which, companies like Roku, have over $500 million tied up into that company. Of which, it looks only about 50 million is like insured, right? Which is going to stem from the bailout. They're going to pay that out. That's the question. Because I'm telling you right now, this is just the beginning. Just because a lot of banks made these bets. The more you look into it, I thought this was one of the worst investments ever. But let me tell you right now, a lot of banks bet this way. A lot of banks said, you know what, we're going to buy these bonds. And I'm telling you, this is just the tip of the iceberg if this starts to happen. So they start doing the bailouts now. The question is they're not going to be able to do them down the road probably. They're not going to be able to do it. So that's what we need to be worried about now. Now let's look at some fundamentals. And I know this is a little bit of a ranty video. I'm sorry. They're not always like this. I try to do as much TA as possible and give you fundamentals. But I think people need to hear this because no one else is talking about it. Before we go too far, I do want to look at Bookmap as well. I had a lot of requests today. When I look at Bookmap, I want to show you a few things. So when we look at Bookmap real quick here, so this is what's happening on the price action today. Let's actually go a little bit further. I want to get all the data we can. We're going to load that. While that's loading, I want to bring up Yahoo Finance for you and just show you the volume that is stemming from selling, right? So for anyone that's saying, oh, we're really bullish out there. We look great. We look great. We're going to be coming back anytime now. We'll be coming back. The volume today, we had a record high. This was our highest volume we've had in over a year. Just so you know, the 189 million on Friday. Today we have around 150. It's going to be around 152 million by the end of the day. I want you to identify what's happening. A bulk of all the volume is stemming from when we start selling. When we start bouncing, the volume slows down dramatically. You can go just look for yourself at the volume throughout the day. Understand, I don't care what anyone's saying. We've been saying it here on the channel for a while. When do we get our direction of the market? When do we have confidence in our direction? When volume starts to correlate to the direction of which we're moving. Volume's definitely correlating to the downside right now. Now, when we look at Bookmap, What do we keep talking about? The path of least resistance. The path of least resistance. I say it repeat on repeat on repeat. Now, when we look at the volume that happened today on the sell side, look at, and the link for Bookmap is down below. You can check them out if you want. There's a discount code or something. But when you look at what's happening here, this is around this is 2 a.m. This is crazy. You get to really see what happens all night long. So around 2, you see the immediate selling. This is all London. This is when London opens. It's just straight pushing down. Just boom, 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 boom. Hammered. Now, near market open, we get a little bit of a bounce, get a little bit of a push back up, and we start bouncing back. But I want you to identify what's happening here. You can see all the volume that's pushing us down at market open. We get a little bit of double bottom done that by that weekly. Now, historically, when we hit a weekly 200 SMA, or when we hit the 100 SMA or the 200 SMA on the daily, remember the volume that kicked in with this? Look at how much more effort it's taking for us to push back up. Look at the buyers. They're trying to stack levels. They're trying to stack them. And they just get taken out. I mean, honestly, they just pull them off. And it's requiring so much more effort with less volume nonetheless. So there's less sellers out even on the market while you're bouncing up here, just so you understand what's happening. And there's less volume trying to push you up. But it's taking more effort. Look at how long this takes. Minor walls. Minor. This is like 100 lots, like nothing to push you through. And then what happens here? Near the middle of the day, you get a little bit of a double top. End of the day, no walls, nothing. Just a straight shot right back down the last 30 minutes to 1 hour of trading. No aggression. No effort. Just boom. Instant push down. This just shows you on that level 2 of what's really happening here. This shows you that the upside is a battle. It's a climb, right? I sound like Miley Cyrus out here. But if we really look at what's happening here, you can see that the effort to the downside is minimal. So am I telling everyone to go short? No, I think going short, the play was last week, right? Last week, what did we mention here on the channel? We mentioned, we talked about XLF. Everyone was like, oh, XLF is the play. And XLF, it looks awesome. I agree with you. It looks great. It looks so bad to the downside. Clear bear flag. But what did we say here on the channel? I said, don't touch XLF. Do not play it. Everyone and their mom's touching it. All retail, everyone on Twitter, all playing it. What did I tell you to talk about? CRE, KRE, regional banks. That's where all the danger was. Go watch Friday's video, Saturday, wherever I talked to. I don't even know where I mentioned it. What happened here? CRE down 12% to end the day. At lows, you were down 16 to 15% there. Almost 17% at one time. That's where the pain is, people, right? I'm trying to help you out as much as possible, right? I'm trying to show you the areas of the market that should require more attention than some of these other ones. But as of right now, you need to understand, this is a very dangerous time. And I don't believe you're going to have a clear direction until after CPI and PPI. But luckily for us, tomorrow we get our information there. Now, the last thing I want to leave us with, okay, and we're going to look really quick here as well, just to show you what's happening with the options flow. This is SPY, heavily aggressive to the downside, very short dated as well. You can go look at those contracts later, screenshot it, pause the video, I don't care. Qs, heavily to the downside. But what you will see, you're seeing a little bit of mix. There's a little bit of mix here, a little bit. Now this right here, even though it's high, it is you can tell it's a strangle, I believe, by the time. So 1047, and you see another one right here at 1047 on Qs. I believe this is a strangle. You know what? No, it's not, because of the time in which it was bought. I am wrong on that one. That's not a strangle. I am incorrect on that one. Sorry. So that looks like a legit order. SPX, heavily to the downside. Heavy. VIX, heavily to the upside. We've talked about VIX a lot. I don't want to talk about too much VIX here. But what do we say about VIX? Once it mounts 24, you shoot up. What happened? What happened on VIX? And this is not to say I am right, everyone else is wrong. All hail Tyler, the king of stocks. Now, you know, what happened here? You pushed up, retested, mounted 24, you shot up today to 31. Honestly, you're making higher lows here on VIX and higher highs. You look incredible still on VIX. I'm going to come back to one thing at the end of the video, and this is probably the most important part of the video is when we talk about what's happening here with yields and bonds. But I want to talk about crypto for a second. The reason why crypto is bouncing is this right here. You started to get your bailout. And this is what happened. USDC, they would not even, the CEO of USDC would not even say how much money that they had tied up with SVB. They wouldn't even, they said we won't say it until we get our insurance claim. Is that ridiculous that a company has that much money tied into one bank? I don't know who's running the risk management on these companies. I really don't. I get it. I'm 25. I'm not as probably smart on paper as some of these guys. I'm probably not as smart as some of these guys in general. But this is ridiculous of what's happening out here. So what happens when we get the bailout here of $25 billion? $25 billion that were tied between, I believe, these two banks of SVB and then the other one. So I can't think of the name right now. There was two, but I can't think of the name. This is what happens. This is what's happening in the market right now. And we're taking this as bullish. We're taking a bailout of what is theoretically backing Bitcoin as bullish. I want everyone to comprehend what's happening. So when you look at the market and you see this bounce and you're like, oh my God, this is my opportunity. I'm telling you, if we're actually bottoming, if we're actually bouncing, you're going to have every opportunity in the book to get into these. All I encourage is patience, doing your own due diligence, and sitting down and trying to think logically right now. That's what I encourage. The last thing I'm going to leave you with is what we're looking at with bonds. Today was the sharpest decline in bonds of what we've seen with this drop, with the 10-year, the 30-year, every bond, actually, every single one. This is the sharpest decline that we've seen since back here of 2020, since 2020. Do y'all know what happened during 2020 and 2018 back here? Would y'all like to know? And really, it's right here, March and April 2020. We have bonds dropping at an unrealistic rate right now when inflation is arguably becoming entrenched, banks are failing, the government's bailing companies out, the bonds are dropping on the hope. I want you to understand this. Bonds are dropping on a hope, on a prayer that they're going to cut rates. And at that, they're projecting that they're going to cut rates at the end of the year. So this is dropping 7 months premature. Again, I cannot caution everyone enough from this video. Am I saying that you're going to drop tomorrow? No, it's not what I'm saying. Even if CPI and PPI come out good, perfect, right? Will I probably trade to the upside for a few days? Yes. Will I be buying long-term stock? Hell no. Hell no. There's no way in the world I would do that. I am telling you right now, this is one of the most dangerous next week and a half that you will see in the market. I promise you. I promise you right now. This is extremely, extremely dangerous. I think we have a long road ahead of us. I am, again, as I've said before, the past few months, 2 months, 3 months, I am as bearish as I have ever been on this market, on this economy, based on what is happening right now. And if we start pausing rates and cutting rates, I will only get more bearish. You need to understand that. You need to prepare. You need to be aware. I encourage you guys to hop in the live if you have questions. We'll be attacking those questions tomorrow, the next day, and the next day. Why? Because on this channel, we encourage transparency. We want to educate to the best of our abilities. If you want to join Discord, join Discord. We want you to. But you do not have to pay to get educated on the channel. We have unlimited resources right now for you guys of free content. I encourage you to use this time to learn and not just throw your money in the market and lose money, okay? That's what I encourage. Whether it be free, joining Discord, tagging us on Twitter, asking questions. We live and breathe this, people. Have a good one, traders.